Hello, all you beautiful people, and we start off today's newscast by saying that a big crypto exchange is now under investigation. This crypto exchange is known as a Korean pump and dump exchange. It is Upbit. They're most known for pumping XRP, but they've pumped VeChain and other coins as well. But they are now under investigation. So basically, Upbit is the largest crypto exchange in the Asian financial superpower of South Korea. The crypto exchange supports 214 coins and 372 trading pairs, but we all know when the volume of Upbit goes up, that coin tends to pump. So it has nearly 5.72 million monthly visits and 24-hour trading volume of over $1 billion. So the latest decline coincided with a political attack launched against the exchange by South Korean Democratic Party lawmaker Lee Kang-il, who raised concerns over the growing monopoly in the country's crypto landscape. So they're not really trying to pwn it because they probably do a lot of pump and dumps. They're actually trying to basically I guess chop up the market because they represent too much of the crypto market. Not only the exchange, but also the entire cryptocurrency sector has felt the impact of the political stance opposing the monopolistic tendency in the South Korean crypto sector. Basically, they're going to investigate Upbit's monopoly because they are gaining way too much power over the sector. In response to lawmaker Lee raising the issue during the National Assembly, the South Korean Financial Services Commission released a public statement addressing the crypto monopoly concern. Kim Bai-hwang, the FSC chairman, recognized the seriousness of the issue. Obviously, they don't want one company to control the entire market. He also raised concerns about the close financial alliance between K-Bank and Upbit. He criticized the bank's decision to offer a 2.1% interest rate, which is really low, on Upbit's deposits, despite K-Bank's operating profit margin being less than 1%. So they're offering an interest rate bigger than their operating margin, which would actually get them to, I guess, take a loss. But I guess they're trying to support the future of crypto. The FSC chairman promised to address all the concerns comprehensively through the Virtual Asset Committee. So Upbit's trying to comply with the South Korean crypto regulation framework. In July, it launched effective measures to prevent insider crypto trading in line with Virtual Asset User Protection Act. So if you're used to Upbit actually pumping your coin over and over again, this might actually dampen your spirit because you might not be able to rely too much on pumps. If they break up Upbit, obviously, it's going to be harder for one basically exchange to coordinate those pumps because the liquidity will be spread out on a lot of exchanges. And Upbit having trouble probably means they're not going to be pumping too many coins as of late. So definitely not a good idea, not a good piece of news if you're depending on Upbit for pump and dumps. The coins that tend to get pumped on Upbit are some of the VeChain's gotten pumped on Upbit before. XRP's gotten pumped on Upbit several times. So has a lot of other coins, but they do tend to favor a group of coins over the other. If you're part of that group of coins and you're hoping that Upbit is actually going to pump you a lot in the next bull run, you may actually be very disappointed because Upbit is going to have a bit of legal trouble. And hopefully they don't get broken up. But if they do actually get broken up, that Korean FOMO may not actually come because a lot of the Korean FOMO, like it or not, has actually come from Upbit in the past. China might actually be wanting to dump a huge batch of Ethereum soon, and we're talking billions of dollars because China has recently seized 1.3 billion in Ethereum from the Plus token seizure. Now, they seized this quite a while ago. But this definitely could have a huge effect on Ethereum price because they might be about to dump it. So on October 10th, crypto researcher Free Samurai told his ex-followers that around 7,000 Ethereum of the remaining 542,000 Ethereum from the Plus token seizures was sent to exchanges. So obviously they have a bunch of Ethereum. They sent 7,000 to exchanges, which means they're probably going to sell it. This indicates intent to begin selling the remaining tokens they started. So the 7,000 tokens might only be the first batch, and 542,000 Ethereum is a huge, huge batch of tokens. The remaining stash of Ethereum from seizure is valued at a whopping $1.3 billion and would put substantial downward pressure on the spot markets if it hasn't already been sold off. Now, since it's remaining, it hasn't really been sold off. If they sell, over the course of a year, it still could be a lot of money, and it could actually inhibit Ethereum's bull run potential. In early August, the remnants of Ethereum seized from the multi-billion-dollar Plus token scheme awoke on-chain for the first time since 2021. Over the last 24 hours, about 7K Ethereum of the remaining 542K Ethereum was sent to exchanges, indicating intent to begin selling the remaining tokens. And obviously, no one can stop the Chinese government from selling tokens. Plus Token released its white paper in 2018, marketing itself as a South Korean crypto exchange and wallet provider that could provide users with high-interest accounts. However, it was a multi-billion-dollar Ponzi scheme that ended in mid-2019. By the time of its closure, it had amassed 194,000 Bitcoin and 830,000 Ethereum. So basically, they have 542,000 Ethereum left. They've moved 7,000 of it to exchanges, and they might move more to exchanges. And Chinese police seized it by the end of 2020, and they had crypto assets worth around 4.2 billion and arrested more than 100 people linked to the scam. Court documents reported that confiscated assets have been turned over to the Beijing Zifan Technology Co. for conversion to cash, with proceeds to be used as recompense. I'm not really sure what's actually happened to that. In early August, blockchain analytics service LockOnChain claimed that the wallets linked to Plus Token had begun shifting around the 790,000 Ethereum. However, this was debunked by Chinese blockchain analytics account EmberCN, which stated that at the time, most of the Ethereum had already been sold in 2021. So we don't really know how much they have left, but it looks like some on-chain analytics say they have 542,000 Ethereum left. That is a large batch of Ethereum, and if they do actually sell that Ethereum, that will definitely impact Ethereum price. So if you're completely in Ethereum, you might want to diversify just a little bit out of Ethereum, because $1.3 billion in Ethereum is still a lot of Ethereum. And if they're selling in buckets of 7,000, and even if they sell over many months, it definitely could still affect the Ethereum price. And I wouldn't be putting all my bets on Ethereum due to this. Now, I still think Ethereum will actually go up in the bull run, but this will definitely dampen some Ethereum's pumping power in the bull run. Because, if they're selling like 7,000 every week or two, like that might cut Ethereum's bull run in half or something like that, because there's going to be added sell pressure for several months yet. So that's the deal with that. Gary Gensler has made some comments on crypto. He is still very obviously skeptical about crypto, unlike his MIT days. And he pointed that crypto is unlikely to become currency because people just basically use it as Bitcoin as a store of value. None of the other coins really have the currency function. And to that effect, he's actually right. Very few people use cryptocurrency as actual currency. Most people see it as an investment looking to make generational wealth. And although crypto is new, it has been 15 years. And even people like El Salvador, they're looking at it as a long-term reserve, not as everyday spending currency. So at this point, I would actually agree with Gensler on his point that it's not really being used for much besides an investment market in the United States. I disagree with him that most coins are securities and we don't really need a new framework. And he says we just need the 1940 Howey test, but the courts have actually decided that most cryptos don't actually meet the Howey test's qualifications and therefore are not real securities. So Gensler's got a lot of explaining to do. And I don't think he's going to give up on his basically prosecution of crypto projects at this point. He is right that cryptocurrency isn't really being used as a currency, though, and it's probably not going to be used as a currency anytime soon. But a lot of the other stuff I just don't really agree with. And, his suing of NFTs and other stuff I think is just absolutely ridiculous. But he remains skeptical of crypto's actual use case, as do many other people in this case, because people do actually see it as an investment project, and I think that's really what it's meant to be. So there was an 86-year-old that had to pay $14 million after admitting to running crypto Ponzi scheme. The amount of Ponzi schemes has gone way, way up. The prosecutors sought 5 years probation for crypto schemer David Cagle because of his age and ailing health. So the thing is, it's not only young people that can get into crypto, old people can run crypto Ponzi scams too. And this guy was definitely running a crypto Ponzi scam, scam people out of $14 million. So an 86-year-old California attorney was sentenced to 5 years probation in order to pay almost $14 million after admitting to carrying out a multi-million-dollar crypto Ponzi scheme. So in this case, crime really doesn't pay. The judgment came out on October 8th. By Las Vegas federal court judge Gloria Navarro. David Cagle was sentenced to 1 count of conspiracy to commit commodity fraud after pleading guilty in May. Cagle is currently in hospice care at seniors facility in Las Vegas due to ailing health. He will serve out his probation there unless he is able to leave, in which case he will be required to wear a monitoring device. So he is not going to jail. This guy is basically on his last breath, basically, and maybe he won't live through all of this, but he scammed people out of millions of dollars. And I'm not really sure if those millions of dollars still exist or not for him to actually pay people back. Government prosecutors who charged Cagle last year said that from December 2017 to around June 2022, Cagle and 2 accomplices lured victims into investing in fraudulent crypto bot trading scheme, promising them high returns and no risk. High returns, no risk, obviously scam. So the object of the conspiracy, as to the papers, beginning by no later than in or around December 2017, which was like the beginning, really the bull run, like 2 cycles ago, and continuing until at least in around June 2022, the last bear market, in Los Angeles County within the Central District of California and elsewhere. Defendant Cagle conspired with David Gilbert Safran and with others known and unknown to the United States Attorney to knowingly and willfully employ a manipulative and deceptive advice, scheme, and artifice to defraud in connection with the contract of a sale of Bitcoin, each such contract being a contract of sale of a commodity in interstate commerce in violation of Title VII, United States Code, Sections 9.1 and 13A5, and in violation of Title 17, Code of Federal Regulations, Section 180.1. So over this time, the trio fraudulently promoted and solicited investments and obtained at least approximately $15 million in victim investor funds for various cryptocurrency trading programs. Cagle helped promote the crypto scam by drafting letters to on his law firm's letterhead, which were sent to victims, so they looked more official. He used his law firm in actually doing this kind of scam, so that's probably extra penalties for him. Victims were under the impression they were investing in a legitimate scheme that used trading bots to invest in crypto markets. Obviously, they weren't. It was just a giant Ponzi scheme, which they couldn't actually get money out of. The scheme guaranteed to repay their principal investment and profit of 20% to 100% of the principal investment within 30 days. Way, way too good to be true. They had to get a lot of new people to actually keep up the facade of actually being able to pay off the older people. In January 2018, Cagle claimed to have 1,000 Bitcoin worth $11 million held in escrow to guarantee investments. He also falsely stated that he had invested in crypto before to help broker trust. So basically, fraud all the way through. He didn't really know anything about crypto. This wasn't a real investment, but I don't know why he played it. I mean, when he started the investment, he was almost already 80 years old, so I'm not really sure why he actually went through with this scam. Maybe it was because he wanted generational wealth for his later generations. I don't really know. Both of Cagle's alleged accomplices, David Safran and Vincent Mazzotta, pleaded not guilty in a wait trial in Los Angeles federal court next April. But since he has actually pled guilty and spilled all the beans, they're kind of screwed. So this just goes to show you, even 80-year-olds can scam you of your crypto. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.